Moon gang, what is going on? What is going on? Let's start off today. Let's just start it off right away. No more messing around. All right, all right, all right. I hope everyone's having a good Thursday. The day before the Olympics. Well, I guess the Olympic opening ceremony, but essentially the day before the Olympics, folks. Hello, wherever you are. I hope you're having an amazing morning, afternoon, evening, night, wherever you're at. I hope you're having a good one. Hopefully we're getting an exciting, volatile day in AMC and GME. As of now, AMC 40.71, pretty much flat based on the close from yesterday. GME 184.48. We'll be going over the Ortex numbers. We'll be going over the technicals and all of that. So I'll give you the quick rundown, a little prep work for the day, and then obviously like any questions like that, we could hop into it, or we could see if there's any news, anything like. Actually, there's a couple pieces of news that I think are important for us to go over. So let's hop right into it. AMC, as of today, to start the day off, 14.36% short interest, shares on loan, almost 93 million, utilization 83.56%. If you're here, if you're an older, battle-tested ape, you already know, but if you're a newer ape, you should know, no matter what anyone tells you, the shorts have not covered. We're pushing 100 million shares on loan. There's a lot of money betting against this stock. And at the most inherent level of what's going on, it's a game of cat and mouse. Will the shorts get squeezed? A prerequisite of that is for there to be a lot of shorts. Are there a lot of shorts? Yeah, even on the most conservative floor level, there's so much money betting against this, as in so many people that could get caught upon a technical breakout that prompts a full-on legitimate squeeze. So no matter what you hear from anywhere, social media, mainstream media, whatever, media from the back of a cereal box, I don't really care. The shorts have not covered. For GameStop, short interest of 14.27%, shares on loan of 7.71 million, utilization 39%. Honestly, I mean, at this short interest, the magnitude of these numbers are different. AMC and GME have very, very different floats, as in a different amount of total shares that the public can trade, that you and I can trade. So that's why this is different. So that's why you need all three: the utilization, shares on loan, and short interest. And honestly, people could say the same thing about GME at this point. The shorts, there's still a lot of money betting against it. You're just looking for a technical breakout that gets the shorts to actually be scared. In terms of the overall market, so obviously on Monday, very, very rough. Tuesday, we were all here talking about turnaround Tuesday. I was telling you that, hey, I think there's going to be a continuation. I was calling out 435. We ended up hitting 434.70 off on that one. And hey, we might get the continuation today. I'm just looking at the support levels from both July 12th and July 14th. We want that continuation above 435, and then that would set up a test of the current all-time high for the overall market. Once again, this is the S&P 500. It's an index tracking 500 of the biggest companies in the U.S. This ETF, SPY ETF, Exchange Traded Fund, is it's one of the ones that tracks the S&P 500, aka the overall market. The other one that's a little bit more important, especially for AMC, is IWM. IWM is an ETF that tracks the Russell 2000. It's a small cap stock, 2,000 small cap companies. AMC is a part of it. GME used to be a part of it, but it is no longer. It got removed and went into the Russell 1000 in late June. So anyway, we saw a nice push on IWM. I want to see it take out this level, and I think this will definitely help out AMC around 223.30, so about up $1.30 from where it closed yesterday. And then at that point, I would then be looking for almost 227. Would love to see a continuation in IWM, just because recently we've been seeing a strong correlation between the Russell 2000, its intraday movements, and also AMC. So that's honestly why we're talking about it right now. In some of the news that I think we should go over, just so you know, don't be surprised if you're hearing more about Clove. I'm seeing an article, I guess Wall Street Bets, this Reddit, Wall Street Bets, once again talking about some stuff, but they're trying to push that Clove is somehow the same as AMC. Clove has joined AMC and SoFi Technologies among the stocks seeing the highest interest on Wall Street Bets. So So we know, yes, credit is due where it's deserved. Wall Street Bets, Roaring Kitty, aka Deep F in Value, they deserve all accolades. They truly do. Why are we here right now? It's because of Wall Street Bets. It's especially because of Roaring Kitty, DFE. Those are the two entities that got this going, specifically DFE. So that's not to take away what's gone on historically, but since then, many things have changed with Wall Street Bets, and they're not really the community that's the main support of AMC and GME right now. So if you're seeing things, I mean, AMC and GME currently do have more of their own Reddits, and that's where people post DD specific to those two stocks. For the people who are still interested, the driving force is no longer just Wall Street Bets. Obviously, they're talking about other things as well. SoFi, Clove. I'm just bringing up to you so you understand a little bit of the players, especially what's going on with this. And don't be surprised if you hear more people, I guess, talking about Clove and wanting you to get in on Clove. But hey, whatever you want to trade, I wish you the best of luck. Have conviction in your trade. Have a trading plan. Just trying to bring that up to you. Another thing that I'm seeing a little bit of on Twitter, a lot of bots lately, two things that we're seeing. A lot of bots lately talking about this concept of selling at 300. I mean, even this morning, I believe that they were on TMI's stream. A lot of bots, the exact same message about selling at 300, and this is specific to AMC. So just know that. I mean, it's the exact same message, just all these accounts, they're using generic photos, and that's actually where the entire thing gets a little bit worse, which brings me to like maybe my more important part. To my understanding, I believe they're using the names and the likeness of people who have passed away and passed away in sometimes some horrific manners. And that's who they're using. So these people who are creating the bot accounts are like legitimately using people who are like no longer with us from like horrific events. And they're using their names, their likeness, and they're using those accounts to post it. And it's just, it's absolutely horrible. So not only is it bad that they're just using some sort of random bot account to post this 300 thing, but the fact that then they're taking it to that next level of using these people, like it's disgusting to the actual like true meaning of like just not like the true definition. It is repulsive, it's abhorrent, it's disgusting. So please be on the lookout for that. If you're seeing these, report them, try to get the accounts taken down, because it's just it's absolutely disgusting. Okay, so that's kind of the rundown for the day. We'll hop into some of your questions right here. CCC, calm, cool, and collected. Bots on TMI's stream saying to sell at 300. Oh, okay, exactly there. Thank you, Carlos. On Twitter saying to stay away from the Reddit. To stay away from Reddit, sell 300, 350 using dead people's account. Yeah, so, okay, that's exactly what I was talking about. And on Twitter saying to stay away from Reddit. I mean, I don't know the context and what they're saying to stay away from Reddit, but I mean, obviously not, this isn't a hit on Reddit, but just like sometimes people find certain social media to be like more toxic than others. So obviously for your own mental health, like, stay in the domain that like it doesn't have some adverse effect on your day-to-day life. Hey Matt, look at the cup and handle on the 15-minute and bull flag forming on the 1 day looks bullish. Cup and handle on the 15-minute. Oh, are you watching this in the post market right here? Like, I guess the post market in today's pre-market. If this is the time frame you're on, I like that. Yeah, it looks like we're trying to get above 4150. A little bit I'll do a technical breakdown of AMC and GME so we can map out the initial levels of the day. Have the shorts covered? Oh, brother, absolutely not. Surely 300 to 400 is an actual realistic value, though after a gamma squeeze, a million shares seems stupid. Beginner A here could be wrong. So for me, I know that there's some people putting out price targets. For me, kind of not in that game. My game, my personal trading plan, and I'm always preaching this to everyone, have your trading plan. For me, on AMC and GME, it's not a price target. I think there's a couple legitimate reasons why I'm not having that. First of all, it's too complex of an equation between a short squeeze, a gamma squeeze, and a FOMO buying, and those interplaying with each other. how could you possibly account for that fairly? Like, people who are throwing out numbers, they're just kind of throwing that out. I've seen no number that, like, no equation that's like, oh, I'm going to weigh this one, and this one, and this is how I came up with this. It's too dynamic. Even if you come up with the number, by the time you point it out there, something else is different. The options change is changing. The short interest is changing. The ape community is growing. So those three things, the short squeeze, the gamma squeeze, and the really just straight up good old fashioned FOMO buying, they're changing on a day-to-day basis. I'm not here to say what is and isn't possible. My trading plan is to ride the trend, especially as there's such a crazy amount of shorts that still need to be covered. For me, there's no reason to pull the ripcord right now. The stock is up high. There's a lot of people still betting against it. So to me, we have all the ingredients for a recipe that could lead to a huge explosion. That's how I'm trading AMC and GME. I'm not saying that's how I'm trading every stock. That's just like my personal game plan for AMC and GME. I'm a little bit hesitant about price targets in general because I think it can go one of two ways. Way one is, what if you lock in your profits at whatever value X, and what if that's only a portion of the run? Like, what if it just keeps on running? Like, whatever you have in your mind, what if it's just like, what if that's only a small percentage? Like, for me, the game plan is to take the meat of the move. I'm not going to be able to bottom ticket. I'm not going to be able to top ticket. I just want to get a high percentage of the move. And depending on what price you might or might not have in your head, if you get out there, what if that's just not the meat of the move? On the flip side, what if you're in this the entire time and you've been battling this out, especially if you're like in here from January, February, or maybe even earlier? Imagine, what if in the scenario that you have a price target, what if in this scenario it comes up and it undershoots it by 1 cent, and then that's when AMC comes down? Because remember, with the short squeeze, it doesn't stay at that new value. It comes up, it goes high. It might dance around a little bit, and then it ends up coming back down. So you're putting in all this effort, all this DD, all this research, all of your just like emotional space, all of your mental space. With a price target, that becomes even more interesting then, because like, imagine fighting this all out. You have your price target, and what if it undershoots it by 1 cent and you end up not getting a fill? So because of that, that's what I'm saying is, for me, I'm just trying to follow the chart and I'm trying to follow the shorts. If the chart is still trending upward, especially when there's still a massive amount of shorts, I'm still in the game. It's that easy. All right. We did that. Does covering an out of the money short from $5 have the same weighted effect as a stock as covering in the money short for 50? Could that be covering older shorts and opening new ones? It would have the same effect, because buying is buying. When you buy a stock, it doesn't matter where you entered it. For them, it might be different in terms of their P&L and their own psychology. But for them to cover the position, for them to close the short, buying is buying. It doesn't matter how you created the position. Cinemark had a bid rise yesterday. Was the news, or is it distracted to take away from AMC? Cinemark, that's a UK one, right? I believe. All I can tell you, and maybe this is just a bit too anecdotal, but there's a way bigger community support for AMC relative to Cinemark. And that's important. Remember, you should not be moving forward in your trading career looking for highly shorted stocks, thinking AMC and GME are like representative of how all highly shorted stocks play out. This is beyond a black swan event. This is a massive rarity. There's no statistical advantage to simply buying highly shorted stocks. What's so special about AMC and GME is they have cultural support, massive community support that has literally never been seen before. How can there be billions of synthetics? It's illegal. I mean, even one synthetic is illegal. It's against the rules. 1, 10, a million, a billion, whatever number. We should not have synthetic counterfeit shares. Across the board, they're illegal. Matt, been watching since February. Just want to say you rock, and thanks for all you do. Shout out Jonathan. Can I just clear up some confusion for everyone? This is from Stonks Batman. Citadel LLC is the company, Citadel Security, and Citadel, you have Citadel Security and Citadel are two businesses run by Citadel LLC. Citadel LLC, the umbrella company, Citadel, the hedge funds under it, and Citadel Securities, the market makers under that. Thank you for that clarification, Stonks Batman. My mom passed away 2 years ago, and a bot used her name. I complained to Facebook. They deleted my mom's account. Sorry for your loss, Robert. Hey, Matt, I've got some money from my daughter's RESP. I don't want to put it into RESP. Any ETFs or stocks I can look into? Long hold, ARCQ. Derek, with that, money for my daughter's RESP. Off the top of my head, I'm sorry, I don't know what an RESP is. But with it, if you're looking for some sort of long-term growth, especially for your daughter's account, that's the point when you like legitimately want to reach out to a financial advisor and explain the plans. If you want to do it yourself, I would recommend looking into industries that you like, that you think are going to grow over the next 5 years, 10 years, 20 years. Obviously, do your research, do your DD. There's a couple industries I like. I do like the EV sector. I like the gambling sector. I think right now the marijuana sector is getting severely beaten down, but I think 5, 10, 20 years, it'll come back swinging. I like the esports sector. Those are some of the sectors off of the top of my head that over the next 5, 10, 20 years, I think will all do exceedingly well. RESP, Canadian Tax Shielded Fund. Okay, so I assume it's equivalent to maybe like an IRA or something like that, like a Roth IRA in the US. So overall with that, I would definitely recommend speaking with like a certified financial counselor, advisor. But if you do want to do it solo, I would recommend tracking industries at large that you are very confident in. They're like more of longer term growth. My mama done told me to bring home a rabbit, but I got AMC instead. Good morning, Matt. No suspenders. What's going on? Matt's duck suspenders. Oh, we'll get you. We'll get you, man. Nick Bowling becoming a space ape. Matt, I just deposited 4K in Webull and it only gave me 1K buying power. I've deposited so many times it never happened. Maybe wait till my bank opens. All boogie. It takes some time. So they're giving you, basically, they're trusting in you that the money's going to actually come through. Remember, it takes multiple days for the money to actually clear. So you're getting 1K on day one just because they're like, hey, okay, like, they're taking that risk. But to get the full buying power, at least in my experience, you're going to have to wait for the money to actually clear. Odeon is AMC in the UK. Don't buy Cinemark. Support AMC. My dad's girlfriend's boyfriend. Hey, Matt, going back to the bots talking about 300, we should expect the gamma squeeze, and how will you analyze it? When should we expect the gamma squeeze, and how will we analyze it? When should we expect a gamma squeeze? No one could tell you the time or the date. I mean, the gamma squeeze, you need two things to happen, two very distinct, notable things to happen. You need a lot of action going on in the open interest, in the out of the money calls. And then you also need the stock to really start moving upwards, like considerable percentage gains. So with those two things, I mean, we need to see both of those happening to have more of a realistic prediction for when a gamma squeeze could happen. I don't think anyone right now is actually pitching the concept of like, oh, on this date, we're going to have a gamma squeeze. Because if they are, I mean, I would be really curious about their theory. I'm not buying it. I don't think, honestly, I don't think that's how it works. My Robinhood statements say margin count. Am I not on margin? Am I not on margin? Remember, so am I not on margin? You could have a margin account without using margin. Like you have a margin account and cash accounts. So those are the type of accounts that you can have with a brokerage. But even on a margin account, you might not be using margin. Just so you know, Chris. All right, GME pushing 186, and then right now we have AMC at 40.50. I'm balls shaking my head. Good morning. What's going on, Mr. Boulet? Mr. Boulet? Had to search for the stream this morning. Francis, did anyone else have that issue, or did it show up? Especially is someone said Trey's locked in Matt's basement. Definitely not. Trey might be a little busy taking care of his awesome new cat, Titan. If you haven't seen that, he's been posting it on Twitter. Seems like a really cool cat. Would it make sense to buy a call that's in the money to obtain a lower cost average on stocks, possibly use it to sell covered calls? Don Vito, that wouldn't help you get a lower cost average, because remember, it is your strike price, and that's what you're thinking of it might lower it. But financially for you, don't forget you're paying a premium. So whenever you're thinking about like, okay, is this going to lower my average or not? Take the strike, but also add the premium onto it, because that's what you would actually be paying. I had to search it. I had to search. Well, that's a bummer. I guess a lot of people had to search it. Live next to the channel. There wasn't a live next to the channel. Oh, okay. Well, I mean, I don't know. If it's YouTube, sometimes YouTube likes someone, sometimes they don't like someone. It is what it is. My top posits have cleared. Why would it say margin? Because you probably have a margin account. Like you could have a margin account or a cash account. A margin account is more of like, it's going to allow you to trade without the money settling, or you could like use extra leverage from them. You just might have a margin account. But quick reminder, no matter what brokerage you're on, it doesn't matter, especially on a margin account, but you might as well check it with a cash account as well. It is worthwhile if you don't want your shares lent out, which is how someone shorts, like they have to borrow your shares from you. You might want to turn off, well, you would have to turn off your share lending. I can't tell anyone what to do, but I can tell you that myself, I've turned off my share lending. I don't want my shares of AMC, GME, or really any of my shares lent out. I don't like, you get a really, really small interest payment. And for me, that's not quite worth it. Like it's not even close to being worth it. So double check that. Doesn't matter your brokerage. Go into your settings. Not all brokerages allow you to do it, but most do. You might have to call them or something like that. But if you don't want your shares lent out, take the 10 minutes it takes today to see if you can turn off your share lending. I heard Robinhood can liquidate margin accounts. If you're getting margin called, they can, but they wouldn't liquidate everything. They would, to my understanding, just liquidate what they need to get you under your margin requirement. Morning Duck Commander, could you look at GME options 9.3, 3 apps all look strange, noting there are no real options. 9.3 on GME. I'm not even seeing any for 9. I mean, that's September. It doesn't even look like they're built out yet. And I'm on GME, right? Yeah. All right. As for now, they only have the month. They don't have any of the weeklies in September yet, so I'm not seeing anything there. Matt, thinking about buying calls on AMC and BB for late August, early September. Crushed AMC calls in June. What are your thoughts? Moon Gang. So I have not been tracking BB really. But with AMC, I mean, it kind of depends on the exact date you're doing and the strike price. But overall, if you're thinking that there's a chance for that mega move between now and late August, early September, I mean, for me, I'm very much hoping. I mean, it's a long game, and I hope we're closer to the end than we are to the start. I can't tell you a date, but like you would be picking the strike price on basically like how apish are you feeling at the moment, and that would like clue you into in what strike price you think is like possible by that specific time. Thanks for all you do, Matt. Haters what hate, but you're spot on with AMC. I appreciate you, brother. Beautiful day to be an ape. Shout out Tim B. Does E-Trade do share lending? If so, I figured out how to fix it. Anyone know how? Thanks, Matt. Almost all brokerages will do share lending. I actually don't know of ones that don't do share lending off the top of my head. So like my generic advice on that would be to assume that yours does do it, and then just to see if you could turn it off. But I mean, please correct me if I'm wrong, but I don't know of a brokerage that doesn't do share lending. I mean, it's a money maker for them. Hey, Matt, can you speak a little bit about Twitter last night? Lots of smack talking and starting drama towards you. I mean, I don't think it's worth, like, I mean, no, I mean, to me, it was like, whatever. It's out there still. You could read my tweets. I feel like, I don't think either was attacking. We were talking about factual things, and then people were just saying ape, no fight ape. Folks, it's okay to go for truth. It's okay to all get on the same page of reality. That would be my only comments. I think it was more so of people's reactions within the community that like blew it up, because people weren't attacking people. It was discussing like facts, like not an opinion based thing. We were like weeding through details to get to truth. It wasn't it wasn't like a personal emotional thing. And I don't know. I think a lot of people try to make it that, and all of a sudden it became like an ape don't fight ape thing. It's like, no, we want the truth. Like these were not like personal attacks. And remember, like no one should be doing personal attacks like at all. But it's okay to seek the truth. Like we should all want the truth. Matt, play a lot of options, but never exercise. If you exercise a call option, does your premium accrued go to the exercise and you pay the difference exercise? You have to have the capital in your account to be able to exercise at that strike. So your profit isn't going to be from the option. Your profit is going to be from when you do the exercise. You're going to get filled at the strike, even though the stock's way higher. So you wouldn't be using that gain. Like you have to have the money in your account to get filled at that strike. And once you do the fill, you're automatically back in that profit because you got filled at a price that's way lower than the current trading price of whatever stock. Heads up to public users, you are automatically enrolled and the platform takes profits. You have to request to one of Public's workers and ask to be taken out of the program. Shout out M. What's your non-financial opinion on Neuro? I have shares at 24. The swings are crazy. Option thought, call or put, not financial advice. Tony H. I know Neuro had some sort of like FDA approval. So it went up on a big fundamental announcement, but I'm not a biotech, biopharma trader. I just, that's not where my expertise are. I don't know much about it. Like, I don't know how good their product was. Like, obviously I know it's a big deal that the FDA approved it. Like that's a very good thing. But I don't know if it's going to have legs, sustainable, be a pump or dump. Like for me, my trading plan with Neuro is to just not trade it. You need to, if you're in it, just have your plan. Like, what is your risk? What is your reward? No matter what you're doing, just please have a plan. So that would be my opinion on for Neuro. You said you're in at 24. Okay, my question to you is, what is your risk and what is your reward? Like, what are the price levels you're dealing with? Matt, love your content, facts, and data approach. I think y'all YouTube should do a roundtable discussion showing it's okay to disagree, but united. I think we would strengthen the community to see we are united. Talk to TMI. Yeah, I mean, what is this? All right, let me check this out. Yeah, I mean, it's fine. Like, it's just so, to me, like, silly. It's not even worthless. Like, people are fascinated with other people's drama, and to me, like, it wasn't a drama thing. Like, even now, it's so much more useful for our community to talk about the actual facts and figures and not like I guess like drama behind it. Like, it's just, what's the short interest? What's the stock doing? What's the SEC filings? I don't know. I'm a little taken aback. Like, it became very much a drama thing. I don't know. But hey, it's one of these things. It's drama. Like all drama, it blows over. Let's just get back to it. Nothing's changed. The shorts haven't covered. The apes aren't leaving. We're going to see each other on the moon. It's that simple. Like, let's use our brain energy and our emotional state to focus on what actually matters, these stocks and making money. I think that's like a way better place for us to put our energies. All right. Ding, ding, ding. The casino is open. Here we go. Here we go. Off to the races, folks. Thank you for all the information you've provided for free in your videos. I've learned so much. Keep up the good work. Head high, posture straight, you crazy duck. Joshua Perkins, I appreciate that. And anyone out there, you can do what you want. You can run your social media how you want. The way I've chosen it is to explain truth, and I'm not here to pat on everyone on the back and give you confirmation bias. I am here to tell you what I believe to be true. If I get things wrong, I'm more than happy to correct myself. It's literally that simple. I care about you guys truly learning, and sometimes there's hard truths to swallow and people don't like it because they would rather get patted on the back and like feel good about it. But in my opinion, when you have legitimate money in play and like you're being faced with a true like life altering opportunity, you have to know what's actually going on. Like you need the truth. And for me, I don't know, like if the truth is on your side, like you're good to go. That's how this works. We should all want the truth. Just transferred from Webull to Charles Schwab and Robinhood to Fidelity, mainly so I could have things in one spot. Shout out Nicholas. And just so you know, so I don't know specifically about Charles Schwab, but I know with Fidelity, they do have not only free trades, but they have they allow you to route your trades. So if you want to do your new trades in a way that would avoid a market maker, you would want some sort of brokerage, some sort of platform that allows you to pick your own routing, and you could route it to the New York Stock Exchange, the NASDAQ, something like that. Fidelity does allow you to do that. And then I'm sure there's some other ones as well. But remember, this is more important for like right now into the future. If you already bought shares, it's that the payment for order flow is already done then. Payment for order flow is all about like your upcoming trade, your upcoming buys, your upcoming sells. So if that's something you want to avoid, I don't know about like internationally, I believe payment for order flow is actually illegal in many spots. So you might have even less to worry about. But in terms of people in the US, Fidelity is one, and I think there is another one that's just not coming to my head. But it's overall, the name of the game is like if you want to avoid it, there may or may not be fees involved depending on what brokerage you're on. Some are free, some aren't. But the name of the game is seeing if you can route trades, like you specifically choose the venue that it goes to. All right. Thankful for people like you and Trey. Yeah, I mean, I appreciate you, and I'm sure Trey does. I mean, Trey and I have been in this really since January, and the support we receive is absolutely phenomenal. We love it. We love the success of the community. We love the education of the community of like how quickly people are learning, what people are doing. It's so cool to see. GME forming an inverse head and shoulders pattern looks bullish. Shout out New England. Is Nvidia going to rise back to 700, 800 in the next few years? And where the sudden drop come from? It was a share split. Remember, a share split, a stock split, is not changing anything fundamentally about the company. It's the equivalent of taking one $5 bill and switching it into five $1 bills. So you have more bills, but like the same as in the market cap, like that's the $5 in this scenario. The market cap staying the same. So they have a like quadruple the amount of shares for a quarter of the price. So if you previously owned Nvidia, if you owned one share, you would now own 4 shares. All right, I think we're up. All right. AMC oversold this morning. Oversold this morning on AMC. Let's see if people are going to come in with the dip buy. Let's push 40 and then 42. Those would be the first major levels. The first major levels. 42, right there. All right. First level we want to take out is 40. Key psychological level, key technical level. Right now, AMC's at 39.93.5. It looks like we are pushing it, which is awesome. GME pushing 185, which is also resistance. 185 right there. All right. Looking strong. Let me pull up on, I want this to play out for about 15 minutes, but I'll pull up the IWM on this other chart, other monitor, just so we can see what's going on. There we go. AMC popping above 40. Popping above 40. Interesting. So what I'm seeing is IWM is actually not looking the best this morning, but AMC and GME are looking strong. Here we go. All right. We're making this run to 41 out of the gates. Some serious strength. Let's see how much we can carry the momentum. Let's see how much we can sustain the momentum. Let's go. How nice of a day would it be to hit that $50 mark? I would love to hit the $50 mark. All right, GME popping up to 186. AMC just hit an intraday high of 40.71. All right, we are still making this run to 41. Ooh. We are looking strong, folks. All right, let's go. We just passed 41. Now we're making this run to 42. Boom goes the dynamite. Folks, what a day. Happy Thursday. Happy Thursday. What's crazy about this is I'm looking over here and IWM is not looking hot. But AMC is looking hot. Feeling a bit froggy. Trying to make that jump. Ooh, straight to 42. Let's go. How long have I known Trey? I met Trey January or February, and it was like through trading. But when we were both little YouTubers, I reached out to him and we started talking from there. When we were just both baby YouTubers. Baby. All right, come on. Let's get this continuation. So AMC hit 41.67. Breakout is at 42. And then from 42, it's roughly 46 on the daily chart. 46. And there might be some intraday stuff from the yesterday. But that's the major levels we'll be paying attention to. The major levels. Come on. We're feeling good. Come on, here we go. Let's gear up. Let's gear up for this continuation. There we go. Here we go. Hello, 42. All right, let's get up to this resistance. Don't be surprised because the RSI is now hot. We might come up here and it might need a little bit of consolidation, but I would love to see it like test it, hit it, maybe get a little bit above it. I'd rather it consolidate like right at 42. But let's see how this plays out. Hang out with me. What's going on? Forget to hit the like on my way. Smash it, apes. Watch the hedgies get wedgies. Hey, Matt, been here since February. Have you ever heard of CFD contract of difference? I have, and some people are asking about basically if you're buying a CFD, does it or doesn't not impact it? For me, honestly, I've never dealt with CFDs. When I do it, it's more so of just the straight up stock. So with that, I would not be able to offer like the expertise on CFDs. Just saying, even the parabolic arch had a dip at this point during its model, kind of spooky. So to my understanding with the parabolic arc, it's just more of the bounce off the 62%, which we did that in like the lower 30s. So Marco, I'm not quite sure of the time frame. Like, are you talking about like on a daily time frame or an intraday time frame? But the dip was the 62%. But that's also where we had the RSI being oversold and the W, a double bottom. So there were a couple things that like all came together that really added up to like a lot of different types of buying, which was obviously led us up to 41.74. Oh, brother. What's going on, Brian? Just want to let you know you're a sloppy dresser that provides mild entertainment. You know I love you. Here's to a great Thursday. Shout out, Den Smith. Can you explain the gap up on Jamie's chart 8 minutes into the day? How is there no cross? Just because perfectly on this 1 minute time frame, right when this closed, the very next buy, it's just the first buy in that time frame, and you're going to see this gap. You see gaps. You can see gaps on any time frame. On the smaller time frame, it's much more rare. Like it's most common on the daily or the weekly or something like that. But you can see the gap. It's just when this ended, the very next trade went through at 186.79, and the minute before that, the last trade went through at 185.74. It's just the first trade of that block, because these are just, it's putting all the trades together that happened in this 1 minute time frame. So this was just like kind of a funky thing that right when it went over to the new 1 minute time frame, the next trade was a gap up trade. All right. We're letting the RSI cool off. Let's make a new higher low. Would love to see this bounce off of 41. Would love to see it. Love to see it. Come on, come on, come on, come on. Start swinging around. Let's get above 41.30, 41.50. Just RSI got a little hot on us this morning. We came out of the gates excited. Came out of the gates a bit excited. A bit excited. All right, so AMC for my audio listeners ran from 39.30 up to 41.74, and right now it's at roughly 40.50, say. Roughly 40.50. What are you going to do? All right, wait, is IWM dragging this down? Hang on, let's throw up IWM for a second. Remember, this is the Russell 2000. Okay, IWM not having the best opening this morning. But the SPY is bouncing back. Right here, we definitely want this to continue to push on IWM. But it's interesting. The SPY is behaving in a much stronger manner this morning than IWM. All right, let's open up a little bit more space. Man, the SPY is rocking right now, folks. It is rocking. Rocking, rocking, rocking. All right, it looks like AMC is trying to get its bounce off of 40. There we go. So we basically broke into this region of resistance, and now it's just in the region. So let's see how this one plays out. Come on, IWM. All right, let's swing this back around. All right. All right, all right, all right. All right, we're looking for the bounce on AMC right at 40, kind of straight up, straight down. Let's see if we can get the higher low we're looking for here, right off of a technical level. Let's see if SPY can actually get this break above 435. That's what I was telling you about yesterday. That was my first region. Thus far, a double rejection. We might have it has like almost a perfect cup and handle. Let's see what this handle actually does on the day, though. Is it going to stay rejected at 435, or are we actually going to get that breakout? Actually get the breakout. All right, what questions do we have? What questions? Okay. All right, all right, all right. IWM dragging us. All right, right now on both AMC and GME, the RSI is pretty neutral. So let's just drop it for now and then wait for the next movement, and we could bring it right back up. Interesting, 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 interesting. All right. It looks like it's AMC. It's trying very, very hard to hold on to this 40. We have some buying. We have a buyer wall exactly at 40. Interesting. So SPY really trying to push here, but on the flip side, we see IWM being kind of weird. What are you doing? 220, 220, 220. Simultaneous. Look at all four got hit at once. IWM, S&P 500, AMC, GME, same 1 minute red bar. Same, same, same. What are you doing? Is it going to catch? Whoa. Almost like scary the same. Look at that. Simultaneously selling across market wide. S&P 500, IWM, AMC, GME. I'm sure if you pulled up some other charts, you'd see similarities. Interesting. Well, let's look for this bounce. Let's look for this bounce. All right, what questions do we have? So more rockets. All right, AMC recapturing 40. There we go. All right, let's see if we can actually break above like roughly 40.50. We're looking for this trend reversal. Looking for the trend reversal. Come on. As of now, GME has very, very low volume, 180,000, and we're 18 minutes into the day. AMC has 14 million. Honestly, low volume in both for what we're kind of used to seeing. So we want some volume to flow in. Maybe we can get some better volatility. Morning, Matt. Will you take a minute to show the MACD on AMC with a little tutorial explanation? Keep on going. So I could definitely show you the MACD, but if you want to know about the math of it and maybe some trading signals, I have that video on my channel. If you just search Matt Kohrs MACD, it's an older video, but if that's what you want to learn about, like I have the math in there and some trading signals that you could potentially use on it. But here is the MACD to kind of give you a quick rundown of it. A lot of people look for the crosses. So earlier this morning, 9:36, we saw the cross upwards. The orange crossed over the purple or blue, whatever this is, and we saw that shoot up. Recently, it crossed the other way. So what we would need for a little bit of confirmation is more so of the orange to cross upwards above the blue. All right. What are we doing? All right. So that's the MACD rundown right there. We are now holding on to 40. Interesting though, because IWM doing something weird. Trying to see if there's any news, but nothing's jumping out at to me. But the IWM as of now is definitely providing more of a headwind for AMC at the moment. So let's see either IWM bounce back or maybe AMC will diverge, something like that. On fighting, trying to reverse trend here. 40.50. Come on. Let's get some buyers in here. People aren't liking the overall market. I don't know, maybe they should just be looking at AMC instead. A safer store of value. AMC right now is at 39.83. GME is at 183.47. IWM, honestly, I'm surprised it didn't catch itself at 220. That's just a nice buy level. But SPY, perfect double. Like, what a weird. This might be what? Just a capital W? Like, what's it doing at 434? The volume today, look at today's public opinion on GME on Webull. Also, where is it on volume? GME, not even 200,000 yet. So lower volume day for GME for sure. In Cancun last week in the pool barn, randomly met another ape in the wild, and we preached the ape gospel to everyone after a few banana daiquiris. I love that. When AMC and GME have the same price action but are different indexes, that screams shorting to me. Correct me if I'm wrong. It could be shorting. What it screams to me is that they're being treated as the same. The same people are watching them. The same algorithms are watching them. It doesn't, I mean, it's being bought the same. It's being shorted the same. It's being manipulated the same. That's what it tells me. I wouldn't just stop at like, oh, just shorting. Until the 947 market-wide drop, SPY was virtually inverse pattern of AMC. Thoughts? I mean, I don't know a pattern for just like a couple minutes like that. Like you're gonna need more data to say a pattern than just the first 17 minutes of open. Remember, the S&P 500 is a multi-trillion-dollar thing, while AMC is around 20 billion. They're very, very different. That S&P 500 is an ETF that tracks the overall stock market. AMC is an individual stock within the stock market. Did some shorts cover on Tuesday that contribute to the 25% rip? Thanks for everything. We won't really know until a little bit later today. My assumption is that a small amount of shorts covered. I think it was more so of FOMO buying, of people buying it like off the technical bounce. If I had to put my theory out there, but I'm not going to say like, oh, absolutely none covered. And I don't think a large amount covered. I think a small amount of shorts covered that were just, I don't know, had a weak short position. Maybe they got in way, way too late and they quickly went underwater and got scared, something like that. Hey, Matt, glad to be in the fight with you. Can you talk about options data and statistical tracker and what it means in relation to AMC? So options data, that's what could potentially lead to a gamma squeeze. So for options, you just want it, you want the stock to move and you want there to be a lot of out of the money calls that go in the money and can trigger a short squeeze or a gamma squeeze. In terms of statistical tracker, it's a data source people have been using. The issue with it's accurate, but it's only using one prime broker. I've talked about this with Ortex, and even people still don't like that. Like Ortex is 85% of all transactional volume. So even that is not the full picture. For what it provides us, is it accurate? Yes, but it's only accurate to a certain degree of the overall picture. Things like Fintel, iBorrowDesk, and Stonko Tracker, they're accurate, but to an even smaller degree because they're all only using one prime broker, and the name of that prime broker is Interactive Brokers. So they're only getting, it's accurate. Yes, it's 100% accurate. It's just not that big of a picture. I mean, even Ortex gives us more visibility, like especially for retail traders, than anything else. And even that is not that much because we get 85% of the legal legitimate picture, and it's completely like not shown at all of the naked shorts. Like we don't have any of that information on naked shorts or shorts that were loaned out multiple times. One of the biggest issues with retail is the quality of our data. We're playing with two completely different data sets. I've stressed that aspect about Ortex, but for whatever, I don't know, some apes out there, I guess they miss that daily spiel of mine of, hey, I get it. Ortex is not perfect, but it's better than the stuff, like it's better than just like nothing. For people to go out there and just be like, oh, like I see the chart, and because of that, I like think just some random amount of shorts. Like that's not how this works. This is like a data-driven, factual-driven just play. That's what the stock market is. Like you have to have some sort of data. You have to have some sort of reasoning. I get it. Not perfect. I just think it's better than nothing, and I think it's better than any other source that we're currently using. Hey Matt, what's the average time to transfer from Robinhood to Webull? I'm worried that the squeeze will happen between that time and I won't be able to pull out. Thank you. Darden, I don't know the average time. Some people have said as quickly as like 1 or 2 days. Other people have said a full week. So if you think you're good for a week from now, have at it. But with that, there is a little bit of, I guess, risk in it. All right. Someone said I missed one. Matt, love the content here since February. Can you explain the analyst price predictions and how much weight you put on them looking at DE? It depends on the analyst. You're going to, as you look at more and more analysts, I mean, an analyst is just another human and another human with another opinion. Some analysts I have found are more right than they are wrong. Like there are some websites that track how good analyst predictions are. But I mean, an analyst statement is not the end all be all. For example, you're asking about DE. I don't know much about DE, but Rich Greenfield, an analyst, said that AMC should be at a cent. And he's a respected analyst, but obviously he's horrifically wrong. So analysts, they can get certain plays very, very right. They can get certain plays very, very wrong. So with it, it's more of like you might want to take into account their reasoning and be like, okay, like what are they saying? What is their reasoning overall? It's a game of like the more information you have, the better. But I don't know. The analysts are not preaching gospel. They're definitely not preaching gospel. Isn't Sean Williams your favorite analyst? Yeah, another analyst too. I mean, analysts can be as right or wrong as we can. They just call themselves analysts. Are you going to get in on the Robinhood IPO? Probably not. Doesn't really seem to be my cup of tea. Not my cup of tea, folks. Ba-ba-bum. Not my cup of tea. All right, AMC, what you doing, baby? 39.48 right now. The intraday, at the first minute, we opened up at 39.30. I just, right now, right here, it's just IWM. I don't know what's going on with the Russell 2000. I know in U.S. politics, they were like voting on the right to be able to debate the infrastructure bill. I don't know if that got held up. I know that there was some sort of other report this morning, but like something is going on in the small cap sector, and it's not the best for small cap stocks right now. Like you could see that in IWM. And then SPY, I mean, SPY is just drunk today. Sold off, ripped up, sold off. I don't know if it's about to rip off again. I don't think SPY knows that the market's actually on. Oh, jobless claims. Oh, jobless claims came in about 100,000 higher than expected. I did read that this morning. I believe it came in roughly around 400,000 and they were expecting 300,000. So that was jobless claims. So obviously that's not good when you're underestimating jobless claims. And someone said the vote failed. I don't. Does anyone else know about the vote? The vote. The vote. The vote. The vote. The vote. The vote. All right. Let's see. All right. SPY's coming back. I guess it's a little bit hair of the dog coming back. IWM coming back. Hopefully, this is the official trend reversal, a perfect half hour into the day. 219.22, 434. we're looking for a breakout of 435, and then for IWM, we're looking for a breakout of 220. And with some exuberance in these two, I think we're going to see some exuberance in individual stocks as well. All right, let's do this. We got that. Let's get some life. Let's get some excitement. All right, we are 100% looking for the SPY to break above 435. Nope. IWM, are you quickly turning on us? Are you faking us out, man? A quick fake out? Well, that's not fun. All right, but in better news, AMC is waking up, trying to retest 40. I want to see it above 40.30. And then we just want everything to go green. Everything you on this screen right now, we don't want really anything to move inversely. We just want green, green, green across the board. We want money flowing into the market. Definitely just want to see some green. Green, green, green. I think I'm up to date. Unemployment rate higher than expected yet. Well, the jobless claims were hot, came in about 100,000 hot. I think someone did tweet this out. I believe I read this. Zero hedge. Nope, that's the wrong zero hedge. Did Walter Bloomberg? Walter Bloom. All right. We should have it right here. Didi, we had that. Uber, Lumen. Okay, yeah. U.S. jobless claims plus 51,000 to 419,000. Survey of 350. So it was hot by, I guess, 69,000. That was the jobless claims thing. That doesn't seem to be the biggest number, though. Okay. All right. AMC got above 40. Would love to see it above 40.30. Oh, man. IWM and SPY looked like they were going to put some momentum together. They looked like they wanted to do it, and now they're deciding. Oh, IWM looking weak. What are you doing, IWM? Come back around. Make us proud. Make us all proud. Can the hedgies just return the 94 million shares on loan and not short them? They could do that if they never took the short position, because remember, you take the shares on loan and then you short, and then you close your short by buying back, and then you return the shares that you borrowed. You can theoretically take out shares that and not short them, but they didn't do that, and we know they definitively didn't do it because ever since June 30th, as of June 30th, we knew there was at least 75 million shares short, at least, and no time since June 30th till now is there anything that represents the covering of 75 million shares. So what you're asking is, yes, it's theoretically possible in like just the stock market, but that is not the situation of what's going on with AMC in the slightest. Vote failed on the infrastructure bill. Oh, okay. That could be hurting IWM then. Possible explanation. Is that a bear trap on the 15-minute? Fingers crossed that it is. AMC is trying to get something going, and then IWM and the SPY are just kind of like messing with it. We just want this push. Like, it was as soon as IWM push, so was the SPY, and that's when we saw the spike in AMC and GME. We just need some money to flow back in. This morning, like I said, SPY's acting drunk. IWM just being hit down. We just want this trend reversal. As of now, AMC is at 39, 34, 36, 38. And then GME is at 183. GME, just lethargic volume, 234,000 shares, and we're 35 minutes into the day. It's just not being heavily traded. All right. 156,000 puts and 294,000 calls expiring out of the money tomorrow. What's the difference between puts and calls out of the money? What's better for AMC? The best scenario is for there to be out of the money calls and then the stock trends upward and they go in the money. That's definitely the scenario that we would want to play out. We want as many puts to expire worthless as possible. All right, I think I'm up to date over here. Sweet, sweet, sweet. The SPY doesn't seem to know what it's doing. IWM now just flat. GME made a new intraday low, 181.20, and then so did AMC at 39. All right, what are you gonna do there, Tonto? Okay. Let's see what you have, IWM. We very much want that to bounce. GME, a little bit a relative volume spike, still low volume, at 181 right now, 180.65. $180.65. Can we get a comedic sponsor of the day? Yeah, I'll have to think of one. Oh. Yeah, Clubfoot Bully. Clubfoot Billy. I'll come up with one. Matt, I believe this is a bear trap. Could see 28 share before a true reversal. I mean, it's possible. I'd be curious about your reasoning for why 28. There's considerable support at various spots in AMC before 28. What was this? Someone's message got deleted. Do we have a Greg in the house? Hang on. Okay. I guess the SPY has no idea what it's doing today. IWM scared, just like the little brother to SPY. SPY came home drunk and it's just yelling. IWM doesn't know what to do, and it's having a weird impact on the market at large right now. All right, where are we? IWM to not coming back 219.50. What are you gonna do? You gonna fight this back? All right, here we go. Here we go. All right, we're seeing a little bit of money flow in. We're starting to see these pump a bit. Let's see if it can hold that. Let's see if it can hold that. And in the meantime, hang on. Let's stand up. Let's stand up for these stocks. Why not? Let's do it. Let's do it. Let's do it. Let's do it. All right. Are they going to push this? As of now, AMC 38.90, Jimmy 182. By trying to make some form of a fight. Some form of a fight. All right, come on. Come on, come on. More green, more green, more green. More green, more green, more green. Swinging it back around. Is this just going to be the shakeout in the morning to the rally all day? We're going to get some magnets now. Come on. I just want to see a huge push here. It looks like AMC trying to bounce off of 39. Would love to see it retest 40 and then obviously 42 right after. Whoa. All right. It's perking its head up. Here we go, ho, turning around. Here we go, come on. Let us see this beautiful continuation. We just want a beautiful, beautiful continuation. What other questions do we have? Just picked up another 100 shares. Need magnets to help get the price up. All right, we'll throw some magnets up. AMC Friday, hashtag $50 Friday, because I know Power Hour today will keep us above 40.45. Lego, shout out Big Shop. Calling me a bully again. I'm cool with it. I like to bully Greg's and Hedgie's. Clubfoot bully. Billy, what's going on? Clubfoot bully. All right. Positions. Let's do this. Let's see some green. All right. SPY trying to get something going. Really, really weird, but I want to see a test and a snap of 435. IWM, we want to see 220 with some excitement in these. I'm thinking overall reversal in AMC and GME. We just need these to keep pushing, though. Oddly low volatility. Oddly low. Come on. Come on, come on, come on. We could do it. Nope. Still drunk, I guess. All right. GME came just below 180. Very much would prefer to see a quick recapture of this. I want it to stay on the north side of 185, and we want, say, AMC to stay on the north side of 42. AMC currently at 38.72. Let's check Ortex really, really quick. 2.63 million borrowed against AMC today. Short interest of 14.77%. GME net neutral, short interest of 14.28%. Let's see if there's any breaking news. All right. Where's the big money? Big money, big money. Big money. Oh, wait. New events. Today is the 22nd. These are yesterday's. We want today's. All right. So we just had a call come in. $40 strike for the 23rd, as in tomorrow. So all of the unusual options thus far today have been for tomorrow. Some puts, some calls, 40s, 38s, 39s, 41s. Not mega money though yet. Kind of a quiet day. We've seen way, way bigger bets. Any news? What is this? This is about GameStop. Okay. Okie dokie. Okie dokie. All right. We need some green. IWM. You're hurting us. You're hurting us in our core. I think we bounce. I think we bounce. Right. At what point would SSR turn on? SSR turns on when you drop 10% from the previous day's close. SSR is short sale restriction, and that's how you get put on the list based on the previous day's close. As soon as the stock drops 10%, you're put on the list. You're on the list for the remainder of the day and the entire next day. And the point of being on it is to make shorting more difficult, but not impossible. It's referred to as the Uptick Rule. So when you're on SSR, you can only take a short position if the stock is actually trending upwards. So it stops the dog pile effect. Like if it's going down and you're on SSR, it stops shorting. But it doesn't make it impossible. And honestly, anecdotally, what we've seen on these live streams through about SSR related to SSR, it just doesn't really protect us as much as you would think that it would. Gary, thank you for that super chat. What happens if we own the complete float? We already own 80%. If we trade 1% per day, we should own close to 100% right now. If we trade 1% today per day, well, that would be on the assumption that apes are buying 1% of the per day, which would be 5 million shares. So that's the assumption that all apes, let's say, are roughly buying what, like 1.5 shares per trading day. I mean, it could be true, but I don't think it is. And my reasoning for that is apes are very much not selling. I strongly believe that many apes within the ape community are buying and that's it. But to trade, remember, when you trade right now on AMC, the trading volume is 27.4 million. Let's just call it 27 million. That means that thus far today, 27 million shares have been bought and 27 million shares have been sold. And it's that selling part that like kind of gets me to scratch my head, because that's what volume is. It's when a buyer and a seller agree on a price. You don't buy from the ether. You don't sell into the ether. There's literally another counterparty on the other side of that trade. That's how trading works. You're buying from someone and you're selling into someone. So right now, this concept of if we bought 1% per day, we'd be, I guess, buying it from whatever, big banks, pension funds, institutions, hedge funds, something like that. And I guess every day you would see the volume go less, because that means that there's less shares that are being freely traded, would be my, I guess, mathematical qualm with that theory. And it's, in terms of owning the float like that, I mean, it gets weird because we know that BlackRock owns a lot. They're above 30 million. We know Vanguard owns a lot. We know Adam Aron himself owns a lot. We know there's other insiders to the company that own a lot. So this concept of owning 100% of the float, I mean, it depends at that point. What do you consider an ape to be? Like, is it possible, if you're counting some of these quote unquote friendly hedge funds such as BlackRock or Vanguard, more of a money manager, if you are okay with classifying them as an ape because they're long on the position, Well, okay, yeah, like that's I guess that this is now more of a semantics terminology thing of like who is and isn't an ape. But I guess when I say ape, or and I think when the way a lot of people use ape is more of the retail public that's in this and just diamond handing it and seeing if like how high this moonshot's gonna be. And I don't know if that's necessarily the same trading plan for BlackRock, for Vanguard, for these other hedge funds that are actually long on AMC. They might just see it as like a good trade to a certain value. But like I said, it quickly just becomes a debate of semantics. Today's stream is brought to you by Matt Strat's Magnet Emporium. Hey Matt, I emailed a state rep in Ohio about a free market manipulation. He loved my legislature's idea and wants to have a call with me next week. Congratulations. I hope it goes insanely well, Christina. Does watching TTM squeeze chart in Thinkorswim a good indicator to watch? I can't really say it's good or bad. I could tell you I don't use it. I haven't found that much utility out of it, but maybe I'm just not using it right. Oh, but to your question, what happens if we own the complete float? Um, if we own the complete float, the stock would not trade. In the theoretical world, well, think about it like this: like just you a quick like I guess brain exercise. So let's just say AMC had 10 shares, and let's just say someone between all of us we own 10 shares. Or hang on, there's 19,000 people in here right now. Let's say that AMC only had 19,000 shares, and each one of us in here owned a share. If we owned all the shares and we refused to trade, AMC would literally not be moving, because if we owned everything, there's no movement because it moves by the new buyers and the new sellers. So this concept of owning the complete float, if that were to happen, theoretically, if you own it and no one's buying and no one's selling, if no one's selling and we already own every share, literally the stock would just go perfectly sideways. But that's if we own the complete float. That's more of like just like, I guess, a theoretical thing, because we know that market makers have some shares. We know high frequency traders. We know some pensions. We know some ETFs. So there are other players, but that's what would theoretically happen if we owned all of the shares. The stock just wouldn't trade because none of us would sell, and then it would just go sideways. Synthetic shares. Well, that's a different story. So like synthetic shares, like even if we owned all the synthetic shares, it depends. I mean, synthetic shares would not be part of the float. So for example, let's say, okay, let's just go this a little bit easier for math. Let's say there's 20,000 of us in here, and that's all the shares that AMC has. It's just 20,000. We all own one share and we're not selling. Well, okay, now you have to consider two things. In the legal practice of shorting, someone would have to be willing to lend their shares out. So if none of us are willing to lend our shares out, well, there's going to be no legal legitimate shorts. If all 20,000 of us are like, you know what, no share lending, we're not going to have it, we're just going to hold, there'd be no shorting then. Different scenario of synthetics. Synthetics are more of, it's the shares that are prompted because of what's like more of naked shorting, of like someone sold without borrowing. So if none of us are willing to lend out and then yet someone still takes a short position, that's then creating counterfeit shares, synthetic shares, shares that should not exist. And then the question there is, well, who ends up buying it? Are apes going to buy it, or is someone else going to buy it? And if another ape buys those synthetic shares, we're back to square one, where it's just not going to trade because an ape's not going to sell. But it depends on who picks it up. If a market maker picks it up, if a high frequency trader, if a hedge fund, if a day trader, well, then you're back to the game of trading. So it's the question of who is owning all of that. But that second example right there, that's more in the terms of someone shorting illegally, because in this just case study, this brain exercise, none of the 20,000 actually loaned their shares out. So someone took an illegal, illegitimate, just a flat out wrong short position and created fake shares. And then to follow that through, you just have to ask, okay, like, well, who's going to get those shares? Who's going to buy them? Matt, thoughts on whales bringing down 30 to 31 wall and then other whales using calls to sell 45, 46 round and round? I don't think it's that likely. And it's just because I don't think it's that likely because it just has so much potential. There's just so much potential energy in this stock that, like, if they had that type of power to go back and forth, why not push it over the edge and just get the explosion upward and get a huge gain off of that instead of just ping-ponging it back and forth in a small range? If shorts are forced to close, who has the count of shorts that needed to cover? Who holds who accountable? Keep hearing from 600 million to 9 billion needed. I don't keep hearing 600 million. I don't know what those numbers would be for, but if shorts are forced to close. So shorts are forced to close in very specific instances. They could be forced to close in a margin call, which would occur if the stock really starts to run, or they could be forced to cover in what's referred to as a buy-in. A buy-in is what happens between a broker and a short when the long position also at that brokerage wants to take their profits. If you're very, very long on a stock and you're like, okay, I'm happy with these profits, I want to sell. And then the brokerage is like, whoa, 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 we actually need your shares to sell because you're trying to lock in your profits, but they might have loaned them out and they might not have any extra shares laying around. They would have to go to the short that they loaned them to and be like, sorry, but we have to force a buy-in. So the only forced things for these shorts are a margin call, a buy-in, or if they can no longer pay the cost to borrow fee. But there's not like an arbitrary date that shorts are going to be forced. How can they be forced if they are all in cahoots? So actually right there, the buy-ins and margin call would be two ways in which shorts would be forced. But before that, I think it's more likely that we see shorts covering on their own volition before a loss gets too big. Because even if you're forced to cover in, like, you're forced at that price. So if they see it start running, obviously they don't want to, like, they're trying to keep their losses to a minimum. So I think we would see them intentionally cover before a margin call, because up or down, like, they could lose money and they could lose a serious amount of money, i.e. Melvin Capital, i.e. White Square. Whether a real, like a legal short or a naked short, they're still risking money. Like, this is not a riskless thing to them. Just because it's a naked short doesn't mean that they can't lose money. And my examples for that are the fact that Melvin Capital blew up, White Square blew up. When you're short, like, and it starts going upward, it's very, very treacherous, especially with stocks like AMC and GME that we just know can go sky high. So a legal short or a naked short, if the stock goes up, especially high, I mean, they're literally risking blowing up like a huge position. Can you tell AMC to stop going down? Okay, thanks. Keep up the good work, duck boy. Sup, Matt? So hypothetically, if we own the float, and we refuse to sell and they're still buying orders coming in, would that not still drive the price up? But in this situation that we own literally like all of the shares, like back to my theory of like, okay, if there's only 20,000 shares and we all own 20,000, and we refuse to sell and there's still buy orders. Well, if there's still buy orders, like, there could be buy orders sitting there but that doesn't mean anything. Like, someone has to actually be willing to sell it. When you're trying to think through it in very small circumstances. Like, pretend that there's only 10 shares. If there's a stock with 10 shares and I own all of them and I just refuse to sell, well, that means it's just not going to trade because I own all of them. And then obviously gets a bit more complicated and bigger when you scale that up to AMC with over 500 million shares. But when you're trying to think through the thought process of like the buying and the selling and shorts and all of that and how things would or wouldn't play out, think of it in a really small circumstance. Just do it with 10 shares, 100 shares, just when you're thinking through it. Matt, what I meant is the sellers are the shorts of Kohrs, and I think the volume per day, 5 million shares to the ape sounds reasonable. Don't you think so? Don't you? So remember, whenever you have any shorts, there's extra shares available, more beyond the or the flow. Okay, so let's go back to my example of 10 shares. So let's say right now, 10 shares, let's say that represents 100% ownership of a stock. Let's call my stock Moon. MOON is Moon. It's my stock, and there's only 10 shares, and I own all 10 shares. Right now, it's weird to think about it this way, but the minimum ownership is always 100%. That's the minimum ownership. As soon as you have any shorts, whether legal or illegal, the ownership has to go above it because of the process of you loaning out your shares and then the short selling it to a buyer, like a new buyer. So let's say that I own all 10 shares and I'm confident and I want the interest payments and I don't think that the shorts are going to be successful. So I loan all 10 shares out. That new short has borrowed those 10 shares and sells them to you. So right now I own 10 shares, a shorted 10 shares and then sold them to you. So in this system, the stock should only have 10 shares, like that's how many there are in existence, but there's 200% ownership because I own 10 shares and you own 10 shares, even though we own technically the same 10 shares. My point in this is that whenever there's any shorts, the ownership goes above 100%. In fact, when there's no shorts at all, the minimum value is 100%. In any time there's any short whatsoever, that's when your ownership goes above 100%, with 100% itself being minimum. So that comes to the point now, and the reason I'm bringing this up, because you're talking about if we bought 5 million a day, is that reasonable? In terms of percentage, it depends on how many shorts there are, because in my example, everyone just got loaned out and that jacked us up to 200% ownership. But if that third party, when I owned it, loaned it out, you bought them off the short. Well, if you loan yours out, well, all of a sudden we can have 30 and now we're at 300% ownership. So you can keep owning, loaning, shorting, buying, owning, loaning, shorting, buying, and you just keep ping-ponging out back and forth. And that's a process referred to as rehypothecation. So you just like kind of daisy chain it out more and more and more, and you're still just using that block of 10 shares. And that's where the math gets like really funky. And that's how you get into situations where all of that being done legally. And then when you add in like illegal naked shorts, it gets blown out of the water even more. And like then all of a sudden you have daisy chains that have daisy chains. And that's the scenario in which short interest can go sky high. And that's what kind of what we saw with GameStop in January. If people were pointing it out, they're like, whoa, why is the short interest 200%? And it was a combination of legal shorts and illegal shorts. But mechanically, that's how those situations come about, is because of once you loan yours out and someone shorts it, that new owner can loan it out again. And there could be another short. And when there's another short, there's another owner. And when there's another owner, that person can loan it out, even though it's the exact same block of shares. It gets really, really funky, but that's mathematically how we get into these scenarios of massive short plays. Do you still have high conviction of this squeezing with all of this supposed fraudulence going on? How would we win against it? I do, because what's going on, it's they're kicking the can down the road, and each time they kick it, it's getting bigger and bigger. So the longer this goes on, the more money that's going into the situation, the more manipulation that they're doing. And as you do more and more, that means that one of these times you might mess up and actually get caught. As it plays out, it's just going to get more and more detrimental to them. It's a ticking time bomb that they're rolling down the road. And in my opinion, it's just getting bigger and bigger and bigger. The longer it lasts, not only are they paying more money and costs to borrow, but it allows more time for regulators to look into it. It allows more time for them to slip up and get caught for whatever they're doing in the back end. So the fraudulence thing, like, I don't think it's just one of these things that we're permanently dealing with. It is dynamic in the situation that people are going to look into it. People are going to finally crack the nut of what's going on. Other hedge funds are going to realize what the short hedge funds are doing, and they're going to take advantage and try to wipe out a competitor. Every single day that it goes on, there's new players in the game, old players out of the game. Regulators are paying attention to it. It's just, like I said, it's a ticking time bomb, and I think it's getting bigger and bigger and bigger every time they kick it down the road. I mean, even at the most minimal level, look at all the FTDs in late June and early July. That right there, that spike in those millions of fails to deliver in late June, early July, something like that should never, ever, ever happen. And as things like that continue to happen, it's going to throw up more and more red flags. And as we get more and more red flags, we have a greater chance of the SEC looking into it. Every day this goes on, the ape nation's getting bigger and bigger. All of a sudden, someone wants to look into it. It like gets onto the plate of some person at the SEC, at FINRA, at the DTCC. For us in our position, being long on it, time is on our side. All we have to do is sit here and wait. On the other hand, shorts do not have the advantage of time being on their side. It's evident manipulation, not yet nothing's being done. With that, we don't know. Like, the SEC is not parading around saying, "Oh, we're looking into this right now," because that like kind of shows their hand. I'm in no way, I'm not in contact with the SEC. I haven't talked to them. I don't know any officials. But think about this, if you were a cop or a detective, you don't prance around saying, "Oh, we're looking into this hedge fund," because whatever they're doing, they're going to stop doing it. So if there is something going on in the background, it would be kept like hush hush and quiet because you're not trying to show your hand. So what if we all put a sell limit at, say, $10 away from the brokers? So that would be like, oh, we need to get these shares back in case it goes up, and they canceled the order once it starts running. 1K club. Josh, that gets a little bit more into the weeds of stock market plumbing of how long they have to actually clear the trade. So they wouldn't really have to do it because they still do have T2 settlement to take care of the actual trade. And with what you're doing, you'd almost need like mass agreement from all apes to pull that off to even like cause them a headache. Possible. I mean, I've seen the ape community pull off like a lot of things like in a coordinated attempt, whether it's like getting something to trend on Twitter. But with that, I mean, a lot of people would have to be on similar brokerages, and we have people that are international. I see what you're saying. I guess it's theoretically possible, but I think it's a little bit more complex than just saying, oh, like we're going to go do that. Someone just asked, what if they push it back down to 31? I mean, for me, nothing happens. I have my shares. If anything, I would probably just buy more shares. I'd buy it on the discount, and then I'm in it. I am in this play. If the shorts are still shorting, and if the stock is still trending in a way I like it, if there's no like giant legal case and we don't get rid of the manipulation, I'm in it. That's my trading plan, though. That's not the trading plan for anyone. But I can tell you right now, folks, I have thousands of shares right now at this very moment long on AMC. Thousands. And I'm in it. If it goes to 31, I'll have even more then. Okay. Hey Matt, if the float is owned by the people and we are trying to get in, it wouldn't be a bid just because increasing until we filled with an ask. It would go up until someone's actually willing to sell. So it's just more of, if we in this scenario owned all shares, like and back to my scenario of 20,000 shares, a trade would go through at the lowest price that someone is willing to sell. Remember, a stock moves on the new buyers and the new sellers. Holding stock does not move a stock. If you're just holding it, you are no longer influencing the buying, the selling. Obviously, holding is better than selling, of course, but just holding stock does not increase a stock or decrease it. It just means that you're holding. When you first bought it, yeah, that pushed the stock up, and later, if you sell it, that's going to push the stock down. But that in between time, it has no impact. Right now, what is this deciding this price on AMC? It's the current buyers and the current sellers. Now, that's a whole different conversation of like, okay, are they manipulating it? Are they not manipulating it? Is it hedge funds? Is it market makers? Is it high frequency traders? Is it retail? Is it big banks? That's a whole different question. But it still comes down to the fact that it's the current buyers and the current sellers. Wouldn't the closer you get to owning 100% cause the price to go up? Cause all shorts want to get out once causing squeeze. Owning 100%. As apes own more and more of the float. Right now, we don't own 100%. The most recently reported one was in early June, and at that point, it was around 80%. If I had to guess right now, it would be higher. As it goes higher and higher, like if somehow there are short hedge funds that know that data, because once again, if you're retail, one of our biggest problems is we don't have the highest quality data sources. So let's say that they do have one of those data sources and they like, no, they are not going to like that. That is detrimental to them the more and more that we own, because it's going to make them harder and harder to get out of their short position. They very much don't want that to happen. In fact, now that I'm thinking about it, as every time the ape community grows its overall share count, that's going to make it more and more difficult for shorts to actually get out, because it's a group of people who are going to actively like kind of not only like, I don't know, it's a group of people who are willing to turn up the pain, and in turn up the pain, I mean willing not to sell. Like they'll squeeze and be like, hey, too bad. Like, let's go higher and higher and higher. I keep hearing that nobody knows the number of synthetic shares. If nobody knows, how will they get covered? Synthetic shares aren't covered. Naked shorts are covered. Remember, this is a semantics issue, but synthetic shares are created by naked shorts. We're looking for naked shorts to get covered and legal shorts to get, like normal shorts to get covered. Synthetic shares are the counterfeit shares that are created from naked shorts. So mechanically, they're taken off the market when naked shorts cover their position because they're buying back shares that they should have never sold. So they're buying back the counterfeit shares. Have you ever thought about trying to interview a celebrity type person aware of the movement like Mark Cuban? Hope we can all meet up one day, brother. I would like to, for sure. I mean, it's just hard to get on someone's like that, like radar. It was probably more possible like in early June when like this is all that anyone was talking about. So right now, like you do need a little bit of, I don't know, the movement needs a little bit more of like clear attention for everyone in the world to be able to pull a celebrity such as like Mark Cuban. Why don't they serialize shares? I mean, they have the technology to, they should, but prime brokers argue that going to like, I guess, T2 to T1 to T evening to T0 settlement, they argue that it's too complex and too expensive. I mean, it used to be T5, then we went to T3, now we're at T2. From 5 to 3 and 3 to 2, it was just like pulling teeth the entire time. Brokerages say it costs them a lot of money. They say it's technically complex to switch over their systems. So every time we try to make the settlement system quicker, they argue with it. And the reason I'm talking about that with serialization is because serialization is like one thing that would help it make it go very, very quickly and allow us for borderline like day of settlement. And honestly, we don't even need, I mean, yes, like a ledger such as like what people are running with crypto, that would work, but even that is like it's not that technically complex. Like not even talking about ledgers and blockchain. Like we before that, we already have the technology that would properly track all shares. But it gets the complexity comes into it with this 2-day settlement system, and it's just too much leeway, and they're allowing people to go short, and then they have 2 days to actually find shares, and like it just gets so messy. And that's why I think everything should just be instantaneous. You should not short unless you have the shares right then and there, and we should allow for instantaneous settlement, and like whoever's shorting it, well, the shares get transferred. Because like it gets so messy when you have a system at large where it's so much of buying and selling, and then like you have a 2-day trading window where the other side of the trade might or might not get filled by finding or not finding the shares. So for me, so many of these problems are fixed if we get to as close as possible to instantaneous settlement. And it's going to take time. It's going to take a lot of time because we're at T2. We got to go to T1, then we'll go to T evening, and then closer to instantaneous. But for me, that's when we argue about Ape Nation, it's one thing of like, oh, it's one thing, it's great, and it sounds cool, and it's a good soundbite to say we want change, we want market fairness. Well, in the effort that we actually can talk to a representative, it's too general just to say we don't want any more manipulation. We want to get rid of manipulation. A government official is just going to say, oh, okay, like what kind? Like we have to be very, very specific in our demands. That's how you actually get your demands to be met. So for example, that would be one of them. We would say we want to get rid of the T2 settlement system. We want as close to instantaneous as possible. We want faster settlement. We want to get rid of pattern day trading. We want to get rid of some of the nefarious aspects of dark pools. We want to get rid of payment for order flow. Like we want like a legitimate set of quantifiable things that we can pitch instead of just saying, oh, like we want the game to be more fair. We don't want manipulation. Because like, yeah, they're going to be like, oh, okay, that sounds good. And like, that's what a politician's just going to do. But on the other hand, if we come at them with like very specific, measurable change, to me, that's how we're more successful as an overall community. Just one more question. If one share is lent out 10 times legally, does that one share shown up as a loan or does it show as 10? It would show up as 10 loans. It would like the loan number would keep getting jacked up. It wouldn't just be loaned once because when it's loaned again, that would count as another loan because there's a chance that it's being loaned on a whole different brokerage. And that brokerage might not even know that it was loaned out on a different brokerage. I received an MMAT preferred share when I bought MMAT, but I can't trade it. What is the purpose of these? That I believe has to do with the acquisition of TRCH, and I believe is that how you got the share, Robert Nichols? Was you own TRCH and it got transferred over to MMAT? It might be just like a processing thing. Wouldn't buying the ask make this soar instead of buying the dips? If we want the shorts to cover, we need to buy the rips, not the dips. I don't agree with that. Like it's just at any generic circumstance in the day, there has to be more buying than selling. Um, on the dips, like if it dips, the reason a dip stops is because people are buying. If you're not buying the dip, the sellers might just keep selling. Like you don't want a dip to keep dipping, and the way rips keep ripping is by buying. So like at any point in time, whether it's dipping sideways or ripping, the way you get it to continue upwards or to reverse course and go upwards or to break consolidation and go upwards is by buying. At any point in time, the buying pressure has to overwhelm the selling pressure. That's how a stock goes up. People have to be aggressively buying. It has to be to the point that they're more aggressive than the sellers. Hey Matt, what do you think will happen to AMC if we go into another lockdown? Um, Another lockdown. So someone asked this yesterday, and it's definitely a good question. It's a tough call because obviously fundamentally that's not good for the business, but I think it might get out like relatively unscathed because a lot of people understand that this isn't a fundamental play in like anyway. So I don't know. It's a tough call, but I think it could be relatively unscathed. I honestly want this to dip. The lower the dip, the higher the rip. Load up and on by the dip. By the way, Matt, you are awesome. Lots of love from Toronto. Shout out. Hypothetically, what would happen if a majority of apes opted out of the stock lending program? Um, there would be not many more shares that could theoretically be legally shorted because we know we own quite a bit. And then that huge chunk that we do own, if we know none of those shares are actually being lent out to anyone, that would obviously be advantageous and like they wouldn't be able to short those then. Is there a way to live track buying and selling? Yeah, I mean that's what we're seeing on the chart. Like that's what you see in the time and sales. Like this is the live buying and selling right here. That's like what a stock chart is. Like whenever there's a buyer, there is a seller. Whenever there's a seller, there's a buyer. Like you could see the time and sales. Shoot, how would I show you this? Hang on, can you guys see this? Let me show you this for a second. You can see in the time and sales right here, whenever you see the price and you see the shares, so that's how many shares were agreed upon. Like, so for like, we see a lot of hundreds and the price, that's the price and the share count that a buyer and a seller agreed upon. Someone just agreed to buy 100 shares at 38.31 and someone agreed to sell that person 100 shares at 38.31. This is the live buying and selling. But like they happen simultaneously. For there to be a buyer, there has to be a seller. For there to be a seller, there has to be a buyer. That gets a bit wonky when you're talking about naked shorting. But remember, naked shorting is selling and there is a buyer, but you should have never done that because it wasn't properly borrowed. So that's a little bit different. And even that, like when there's a naked position and someone sells stock, creates a short position that they shouldn't have, there's still like an actual buyer on the other side of that. It's just someone ended up buying counterfeit shares. But right here, this is the live buying and selling, and it's being represented in the chart throughout the day. I can't believe I caught and bought the 37.90 dip. Congrats. I vote for a try not to laugh battle between you and Trey cracking dad jokes on each other. I think that would be hilarious. I would totally do that. Get Tom McDonald on board, completely independent. I've listened to some of his stuff and I like him. I think he's a funny dude. All they need to do is basically require a hard locate on borrowed shares that could work even with T2 settlement. Chris, I agree with that. It's just right now the system that we have that shorts can be taken when they don't have to be located right away. It seems messed up. Like I just don't know how that is even possible. Well, I know it is possible because that's what's going on. I just don't know how anyone ever thought it was like a good idea to allow it to be. Female ape YouTube channels that are pretty credible. I don't know of YouTube channels, but I know there's a handful of credible female apes kind of on Twitter, tweeting out good information, tweeting out videos, running the calls, like the Twitter space calls. On YouTube, none come to my head, but I know there's a plethora on Twitter that do, like I said, good tweets, good videos, running space calls, all that stuff. Kicking snowball downhill. They are down on the slots and going back to the ATM. They know it's going to pay out. Need to hide losses from the wife till they do. Is a cup forming? No, not yet. A little bit of a cup on S&P 500, really. Could the past few days barcoding be them keeping it in a channel to do calls and puts? Is that new standard operating procedure? Be them keeping it in the channel to do calls and puts. It depends if they're buying or selling calls or puts. If they're buying, they want movement. If they're selling, they don't want movement. Why don't they serialize shares? That's a great question. I think that they should. All right, I think I'm finally up to TRCH to MMAT thing is a placeholder for a payment of dividend from the merger for the sale of property that was agreed to be sold in the merger. At this time, there is no value because the property has not been sold. This is per the company handling the process. Took me 4 hours to track down the right person to get answers from MMAT PFD and its worth and when. Okay, so the MMAT-A thing, it sounds like through the merger they're selling something and they're waiting to actually sell that thing to have the money. To anyone that knows, how can Clove have 105% institutional ownership in Webull, see, blah, 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 and be treating others as essentially retail traders? Who else can be an other? Institutional? I mean, insiders, pension funds. Thanks, Matt. Yeah, I mean, there's going to be a host of ones that would fit that definition. Basically, anyone that's just not an institution, aka probably big banks and hedge funds. Could one particular sector of IWM be so that bad that it drags IWM down, or does it take pretty much? No, it could be if there's, especially if it's a sizable sector, it definitely could happen that way, Brambles. All right. Oh, look at those cats. Cool cats. Something to throw out there. I really didn't want any brokerage cash, but I wanted margin for instant settlement so I could use funds from sales to day trade and allows you to call in and just disable brokerage cash, still keep instant settlement, keeping yourself from accidentally going into debt. If you're new to it, I made this mistake once with Robinhood years ago and got margin called unexpectedly. The same circle chart separates traders like insiders. Are you sure you understood my question? It's okay other way. It's not a big deal. Isn't your question of others are essentially retail? Who else can be other? I mean, isn't your question just who else fits the definition of other? But this is also like a Weeble defined thing. If you're looking at whatever that is, the inflow, the outflow. I don't know if it's a set rule, it's how they defined it. But in this case, if you had institutional owners and the other option was others, well, there's still many things that are just not institutional beyond retail. Right, all right, all right. All right, all right, all right. All right, what are we doing? IWM looking weird. Does not know what it wants to do today. SPY hanging up above 435. GME at 178.41 and AMC at 38.10. Let's do a quick Ortex check. All right, 2.6 million borrowed against AMC right now. Net borrow and the total borrow is 3.62. Short interest of 14.76%. And then on GameStop, net neutral 14.3%. All right, all right, all right. Daniel becoming an astronaut. Look at the 10-minute chart and how low the RSI is. Just yeah, severely oversold. I'm sure it's oversold on various time frames. Actually, the 10 minutes not that bad. It's bad, but they're all kind of the same. Like it was worse right out of the gate this morning, but we're kind of bouncing now. Payday tomorrow equals Green Day for apes. Shout out to Matthew Cook. Look at the July 12th high, 46.55, and July 21st cup and handle. Okay, I see what you're saying. This is a giant cup, and then we might have the handle. Yeah, we would just need the handle to actually follow through. But I definitely see what I see what you're seeing. Did you see that they were using bots of the victims? Yeah, we talked about it this morning. It's just super messed up. Mathis, your explanation of buyers and sellers is confusion. It sounds like the price would stay stagnant. In what scenario does the price fall and rise and fall? Because it's all about the price that's agreed upon. This seems to be like a major thing tripping up the ape community, and it's so incredibly important. Whenever there's a buyer, there has to be a seller. Whenever there's a seller, there has to be a buyer. How else would it work? Like, how else, if there isn't a counterparty, like, how would anything ever be decided then? Be like, well, I want to sell it into the ether for $8 million. And then someone's like, well, I want to buy it from the ether from like for 1 cent. Like, of course, there has to be a counterparty. The thing that I guess confuses people when I say for every buyer, there has to be a seller, for every seller, there has to be a buyer. What moves the price is the price that's agreed upon. I can come to you and I could say, I want to buy AMC off you for $15. You could just say, no, I don't want to do that. Like, why would I do that? But someone else could say, yeah. And then when they say, yeah, I'm like, okay, here's $15. Give me a share of AMC. Like, all it is the price that is agreed upon for buying and selling. With any buyer, there is a seller. With any seller, there's a buyer. Why does price move? It's the price that's agreed upon in that transactional deal between the buyer and the seller. Someone just said, I agree on 69,420. You could try to sell it there. And if someone is willing to buy it off of you for that, well, okay, cool. The trade goes through. But just because you want to buy something or want to sell something at a certain price, that doesn't mean that there's going to be a counterparty. When you see the time and sales, that means that two parties, a buyer and a seller, agreed upon a deal for a certain price and a certain amount of shares. All right, I think we're there. We're there. We're there. We're there. Whoa, whoa, whoa. What else do we have? They can't cover if we don't sell. Someone would have to be selling it to them for all the shorts to cover. So the more and more we own, it would make it kind of bottlenecks the scenario on them. All right, someone just said missed super. Why doesn't BlackRock borrow a ton of shorts and not use them to drive short interest and keep them from being used to, so if they borrow stock, that doesn't increase short interest. Short interest is based on the amount of actual short shares. If you're just borrowing, like if shares just go out on loan, you're not actually selling stock, so that wouldn't increase the short interest. But for the second part of it, from being used to drive the stock down, could they do it? Yeah, they could do it. Why don't they do it? I guess they just don't think it's worth it, or I don't know. I like BlackRock doesn't call me up and tell me why they're not borrowing all the shares available. How many shares would require each ape to purchase the remained a 19% that is being held and manipulated by institutions? It would actually be more than 100 million, because you would have to buy that 100 million that we don't own, and then on top of that, all of the new shares that were resold from shorting. And that's the question of like, well, okay, how many were actually shorted? But with that, all of those people would have to also be willing to let go of their shares. There's no one saying that BlackRock right now is willing to give up their shares. Like, you can only buy them if there's a willing seller. If there are more people who want to buy, then the highest bidder wins, essentially pushing the price up, correct? Yep, Brett. I mean, it's just the demand is outweighing the supply. When the demand outweighs the supply, price goes up. When the supply outweighs the demand, the price drops. It sounds like someone has to sell their share so I can buy a share, but do you mean a brokerage is selling you a share, or is that owned yet? No, the brokerage isn't selling it to you. The brokerage is the one who's putting your order out in the market. The brokerage is like, oh, okay, like you're telling me you want to buy 100 shares? Great. I'll go get it to a place to see if I could get you fulfilled. So in this scenario, I don't know. Let's say you're trying to buy some tulips. And you're like, hey, I want to buy some tulips for $10. You would tell your brokerage that. And in this scenario, that would be like, I don't know, like you're an Uber driver who's like, oh, okay, I'll go get it for you. The brokerage drives to the florist and asks, and at the florist, or like a marketplace, let's say it's like a farmer's market, the market is the exchange, and then someone else there sent their little Uber driver guy, and they're like, hey, like I'm trying to sell these tulips. And they're like, well, my guy's saying he wants to buy it for 10, and their guy's like, oh, they're saying they're willing to sell these tulips for 10. The two Uber dudes are like, okay, great. The broker is the one who's like facilitating all of your order sending and getting it to where it can like actually get executed upon. Then why does short interest go down when shares are returned and you don't think they were sold short? Because remember, this short interest estimated. What is the short interest estimated on? It's estimated on the shares on loan. Remember, legitimate short shares, they're not reported every single day. This happens every single 2 weeks where we get the numbers from the SEC and or FINRA. Estimated short interest, estimated short interest. Estimated is a very important and key word, and the estimation is based off some sort of percentage of the shares on loan. So if you're always assuming the same percentage, of course, when they're returned, that means the shares on loan drop and you're multiplying it by the same percentage. So short interest itself is going to drop. And as it goes up, the opposite would happen. Short interest would also increase. Where is the supply coming from? Willing sellers. Supply is willing sellers. Demand is willing buyers. All right, what else? What else do we have? Okay, and then remember that, so, I mean, I guess the tulip example is right, but remember, when you're buying or selling, it's being done at some sort of marketplace. Those in the world of trading are referred to as venues. There's multiple types of venues. Exchanges are a venue, and really, a venue is just a thing that facilitates connecting a buyer and a seller, such as an exchange, the New York Stock Exchange, the NASDAQ, IEX, et cetera, et cetera. There's about 14 major ones. Another type of venue is dark pools. That's like an exchange, except you don't see the current bid and ask. It's hidden. You just see the price. But remember, the price is the same across all venues. It's the NBBO, the National Best Bid and Offer. So it's trading at the same price. You just don't see how deep the bid is. You don't see how deep the ask is. You don't see this thing. This is actually just for the New York Stock Exchange. So this is just like one of the lit exchanges. So anyway, all the exchanges are a venue. All dark pools, there's about 40 major ones, are also all venues. And then the other type of venue are referred to as retail wholesalers, retail brokers, such as market makers. That's the payment for order flow crap, such as Citadel and Virtu. Those are all venues. Those are all places that could facilitate the transaction of stock, connecting a buyer to a seller and a seller to a buyer. The question is just, who is it? Is it someone on a lit exchange? Did you run into someone in a dark pool? Is the other side of your trade being taken by Citadel? But they're all venues, and Your broker is what's sending the order to those. And in this scenario, that's what payment for order flow is all about. Payment for order flow is when your broker, your Uber driver, okay, so in this scenario, let's say that there's 3 different tulip markets. A very well lit one where you could see all these beautiful tulips. It's great. All of these exchanges, you're like, hey, we see it. There's all of them. Another one is just like a really dark one. It's sketchy. It's like behind it. And what's weird about that is they don't see the tulips. Like it's hidden under the table. And they're like, hey, I want to buy 10 tulips. Do you happen to have 10 tulips? And they're like, yeah, like we might. And they check and they show it to you. So in the first marketplace selling you tulips, they're all over. It's a beautiful greenhouse. You see it. You see how many there are. You see all the buyers. You see all the sellers. A dark pool, a little sketchy. It's a table and you're like, can I buy 10? And they're like, let me see if I have 10. They look under, you don't see it. And then they show it to you. The third option is basically a like a messed up exchange where they're like really, really aggressive and they want that information. And it's not exactly a lit exchange, but it's also not exactly a dark pool. It's kind of somewhere in between. And it's just more of like, I don't know, almost like connecting directly to the farmer, except this farmer is like kind of insane and also kind of like ruining the marketplace. But anyway, payment for order flow is you say you want to buy tulips, and your Uber driver, the dude who's going to get you tulips, he gets a kickback for not going to the first 2. He's not going to a dark pool. He's not going to a lit exchange. He's being paid off by the farmer to go to him. And the farmer is trying to do all of these tulip trades for you. Like he's trying to take the other side of every single tulip trade. And the reason he can do that is because he is the farmer. He's the one making all the tulips. He's the one buying all the tulips. He's the one providing all the tulip liquidity to everything out there. So basically, really well lit greenhouse, a sketchy, almost crack house of a greenhouse. And then the final one is the actual farmer. And in payment for order flow is the farmer paying off your Uber driver to route all the trades to him and to not go to the other 2. That farmer, when the trade comes to him, the transaction, he can do it. And then he could say if he wants it or not, he could take it. And the reason he's paying for it is because he thinks he can trade better. He thinks he knows about what's going on with tulips and he'll make an advantageous trade. But if he doesn't want it, that's when he passes it off to the well-lit greenhouse or the really sketchy crack house greenhouse. That's how that works. Like he could pass that order off if he does not want to take the other side of the trade. In your opinion, how great is the chance of the squeeze with the short interest dropping as well as the stock price? Is there a play to be made on the stock? I don't know how I would like quantify it, but if it mean like, I mean, I have my money on the play. I mean, we ran 25% 2 days ago. Like, I think people are kind of being overly dramatic with saying that it's dropping. Like the short interest still considerable, the price still considerable. So I'm still in it. If buyer and seller don't agree on a price, who is the auctioneer, the moderator, that walks the price up or down, and who decides at what increment? So that's actually more of the market maker thing. That's when you're hearing about a very wide or tight bid-ask spread. So if it's a very liquid and actively traded thing, you might have a bid-ask spread of only 1 cent. But if someone's willing to buy at 10 and the lowest seller is willing to sell at 20, well, then your bid-ask spread is $20. But in this case, the auctioneer that you're referring to, Desert Fox, it's the farmer, it's the market maker in this scenario. Who's the auctioneer and what walks there? So the market maker is the auctioneer, it's the farmer, it's the person trying to get the trades to go through. Be like, all right, we have this buyer, we have this seller. Are you going to meet? No. We'll raise it up a little bit. Are you going to meet? No. They see the action going on at the lit greenhouse. They're like, whoa, 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 tulips, like there's way too many. We need to drop the price. People aren't buying them. Or whoa, there's not enough tulips. There's high demand for tulips. We need to raise the price up. The farmer like is this like, it's the mastermind Kaiser Sosa like type of a dude who this farmer, because they are the person with all, like, they have the access to the lit greenhouse, the crack house greenhouse, and the farm. They're the one running it. That's what Citadel Securities and Virtu does. They have very, very advanced hardware technology and kind of basic technology, like basic software, but it's really advanced hardware. They're in all these dark pools. They're in there, and their algorithms are monitoring and trying to sense out, is there a hidden buyer wall? Is there a hidden seller wall? And then for lit exchanges, it's easy. You just look at them. Like, anyone can look at them. You can look at them. I can look at them. But basically, this farmer is running like a tulip mafia, and they have connections everywhere. They're paying off everyone. They're getting the orders. They know what's going on in the exchanges, the lit exchanges, and then they have a very good idea of what's going on in the, like, under the table dark greenhouse. Whenever they see mega trades go through at the dark greenhouse, they're marking the current bid and ask spread from the NBBO, the National Best Bid and Offer. So they have ideas of where all the buy walls are, where all the sell walls are. And that's why they feel so confident in doing for payment for order flow, because they have such an asymmetric information advantage. That's the entire game. It's just because they have so much information. And for me, realizing that this is how it's going, and the reason they are making billions and billions and billions of dollars a year is because they have so much information. And then we have people in the ape community that, like, nah, I'm just going to guess here. Like, this is how I feel. We should want information. We should demand higher quality information sources, because that's how they can pull this off. How do Virtu and Citadel Securities and, like, this mafia tulip farmer pull things off? It's because they have the perfect data set. They have the strongest data set. They have the most accurate data set. And right now, like, retail, that type of data is not available to us. And that's something that, like, I would like to see more of. Like, I want people to come up with the sources to get the data, to crowdsource data, to debate the data in obviously a healthy manner. But that's, like, one of the biggest issues right now with Wall Street versus retail, is we get a little minute picture of, like, the full data set. It seems like an organization in that position shouldn't be allowed to trade. Well, they're the one, this farmer, he's the one who's keeping the tulip market going. He's providing a lot of it. They're taking, the tulip market is being so actively traded because they're buying and selling. It's not like the farmer's just buying or just selling. All the farmer cares about is wheeling and dealing tulips. He wants to buy a lot, he wants to sell a lot, and he wants to make a small profit off of every single exchange of when he's buying and selling. The farmer doesn't really care if tulips go up in value or down in value. They just want a lot of tulips to be bought and sold. Would actual certificates help negate fake shares? Yeah, but I don't know if we have to go that far. I think there's other advanced technology that would pull it off without that. So if a company does an IPO and previous to that has no shares owned, who is selling? So that's literally what an IPO is, initial public offering. What are they offering? They're offering the shares. Like, they're selling shares to the market. So they're going to some fancy person, like, what is it, like B. Riley and Goldman Sachs, and they're like, hey, like, make these shares, like, make them like this, and, like, get them into the market. Initial public offering. What are they offering? They're offering their shares for the first time. I guess I thought we buy shares that are unowned on the market, so the price would go up because of less supply. No. Whenever you buy or sell, you're buying it from a counterparty. You would never buy something that's unowned or sell something that is, like, you have to sell it to an owner and you have to buy it from an owner. When there's an initial public offering, you're buying it from Goldman Sachs, B. Riley, whoever's the offering agent. Hey, Matt, thank you again for the content. My question is that if a broker sells you a synthetic share, when the smoke clears, don't they lose money because they sold you something that doesn't exist? Very, very close. And yes, you're on the right trail. So it's actually the naked short who's selling you the synthetic share. And then if the DTC notices it and FINRA notices it, they're going to come and be like, yo, broker, why did you produce this failure to deliver? Why did you allow them to sell a fake tulip? And then the risk is on them, like the onus is on them to go and buy a tulip off, so there's the right amount of tulips in the system. But that's a fail to deliver, and the risk is on the prime broker to take care of that fail to deliver. All right, I think we're up to date. When doctor tells you you're just anxious, but all I do is stand up to be a hard patient. Oh, wow, M. Except the farmer in this case is a software program. Exactly. All right. All right. I think I'm up to date. MMAT preferred. Yeah, I don't know much about what's going on with MMAT. Trey just dropped a new video. Shorts are hidden in short interest. I don't know what that means. Shorts are hidden in short interest is telling you how many shorts there are. I don't know how you would hide shorts in short interest, because that's what short interest is telling you. I guess I would have to watch it. That doesn't make much. I think there's a little bit of terminology confusion or something. After 1 year of holding no capital gains tax, stay positive. There's still capital gains. Well, it depends where you are, and you need to talk to a CPA about that. But in my experience, after you hold for a year, it is more of a you have less capital gains to pay. Puts are hidden short interest. Puts are hidden in short puts. Well, yeah, because you could buy puts and you're betting on it going down, but you're not loaning shares. That's like what a put is. Like a put is a bearish bet. Going short is a bearish bet. But like, yeah, I mean, puts are hidden in short interest. Puts are hidden in short interest. I guess that's the title. I mean, I'd have to watch it. Like, I haven't seen it, obviously, if he just posted it. But if you buy a put that has nothing to do with short interest and it's still a bearish bet, you're attempting to profit off the stock going down. That's what a put is. Buying a call is attempting to profit off the stock going up without adding to the long position of the stock. Like, you're not, it's a derivative bet. You're betting on the action of something else. A put is a bearish bet if you own a put, and a call is the exact opposite. But if someone loaded up on 1 million puts right now, that would not increase the short interest, because you're not selling stock, you're buying a put. What is the difference between commissions and payment for order flow? A top level, not much. I mean, the market maker is pay for order flow. They're paying commissions to the broker for routing orders to them. They're getting a kickback for sending all the orders to them. All right. Well, folks, I was actually supposed to end this up about 20 minutes ago. So that's the morning session. Thank you. We will be back 2 p.m. Eastern. We're going to do it from 2 to 4. For everyone in Discord, I'll be hanging out with you in a second. But that's the morning session. Things are pretty quiet right now, but we're going to stick to the continued schedule for the week. Shout out. Thank you for all the support. Remember, I will see you at 2 p.m. Eastern today. We're going to watch that. We'll learn something. Maybe I'll do some commentary on Trey's video or something like that. And then we'll watch Power Hour, obviously. But awesome. I will see you at 2. And remember, from me and Chair, best of luck in the markets.